It's going to work. Yes. Good morning, trade pros. Welcome to the morning market update for this beautiful Tuesday, March the 17th of 2020. I'm wearing my day trader shirt. Yeah. And, it's because I want everyone at home to know what I do. Between everyone at home, me and my wife, we both have to be aware that I'm a day trader. But yeah, this is my cool shirt. You can't see it, so I had to lift it up a bit. Good news as well. You guys aren't going to be seeing pictures of my ultrasound, text messages, and any other stuff like yesterday. You're just going to get to see my face, which could be a good or a bad thing, depending on how you look at it. All right. We're going to have a great day today in the market. A lot of exciting stuff are going to be happening. I got a great update. Today, we're doing a special webinar for Elite Team. So every third Tuesday of the month, our Elite members have a chance to ask us, the Trade Pro team, to create a piece of development for them, whether it's a skill build or a new strategy, whatever it is they want. We poll them, they tell us what they want. All right. And so this is kind of our way of providing continuous learning in an industry that people think, I learned one strategy and I'm good. I could print money. So the way we're going to do this month for the Elite session on tonight, it's at 8 p.m. Eastern. It's a live webinar with Q&A. And so we're going to do a special session tonight. I've outlined 3 scenarios on how this coronavirus situation could proceed and how it would impact the stock market and what things are going to move as a result of these 3 scenarios. And most importantly, what to watch to know that one of these 3 scenarios is becoming the more likely or probable one. All right, so that webinar has been put together. If you want to watch it, sign up today, become an Elite member, and you can check out that webinar, which is one of many benefits of what we do at Trade Pro Academy. In addition to our community, all right, our online live trading for 3 hours a day, our Discord 24/7 chat, our courses, everything. All right, great time to give it a shot. And tomorrow we're trading crude oil together, which will have some volatility. If you're in a lack of volatility, there's going to be some tomorrow on crude oil. So check it out. Plus comes the 14-day money back guarantee, so it's risk-free. It's the only time you do anything risk-free at Trade Pro Academy and anywhere else. Not at Trade Pro Academy, but in the industry, I meant to say. It's the only risk-free thing in the industry. All right, it's checking out Trade Pro. Let's jump into it. Morning, Pele. How you doing, brother? Long time. Rami, good morning. Ali, Craig, everyone on YouTube, hello. All right, let's talk about what's happening. Huge volatility overnight. S&P 500 was up 5%. Then it was down negative. So S&P futures hit limit up, dropped back down. All right, come back up to where they were, and now we're sitting about 1% above the highs, above the closes rather of yesterday. So it's been a very volatile session, and this volatility is interesting because a lot of the times with volatility, up and down, big swings, it means we're in a consolidation phase. I think we could sit here and rest at this point a little bit and build out some value. We've literally been in free fall without any support, and at some point there has to be some two-way trade. While just a couple weeks ago I thought that this market was getting complacent to the long side, all right, now I think it's getting a little bit overdone to the downside. And there are some measures being taken worldwide. All right, the market hasn't really priced in the fact that the world's responding to this corona situation. So I think it just needs to take a pause, a breather, and build out some value. So while there's a lot of volatility, this huge up and down movement overnight suggests that at some point we're going to start to settle into a range. It might be a crazy 200-point range, but hallelujah, because day traders, the reason I wore this shirt, I almost hung myself doing that. The reason I wore this shirt is because there's going to be opportunity for us in that sense, and as that happens. All right, 4,281 is the number of coronavirus cases that have been confirmed in the U.S., along with more than 70 deaths at this point. Donald Trump supported the airline industry yesterday with a really interesting tweet that China absolutely detested. All right, so Boeing has been corrected. The immigrant way to say it is Boeing because it's a funny sound, but Boeing is actually asked the White House and congressional leaders for support. They said, they need some aid to support their loss of airlines. They need to stay afloat. They still have bills, right? Less expenses. The variable costs obviously aren't as high because there's not much demand for flights at the moment. But their fixed expenses are also crippling. They're really high for the airline industry. So Donald Trump has said the government will back them 100%. In this tweet yesterday at 6:51 p.m., he said the United States will be powerfully supporting those industries like airlines and others that are particularly affected by the Chinese virus. We will be stronger than ever before. China didn't like the fact that he called it the Chinese virus. All right, and they responded overnight. But nonetheless, the importance of that tweet is that he's willing to support the airline industry. Airline stocks will probably be supported a little bit today. They might catch a little bit of a bid even, but at the very least, I think we're going to catch a little bit of a breather here. We've been running a marathon. We got to stop the sprint and consolidate a little bit. All right, and any consolidation is going to feel like, oh, I wish there was more volatility. Careful what you wish for, because there was a little bit more volatility yesterday, and we had 2 trades. Made $100 yesterday. You just couldn't really get in on the trend. By the time you're ready, the thing's limit down. Limit down means you can't trade. It reopens and limited down in 1 second yesterday. So, I think this is good. I think it's time to pause for a little bit. All right. Also, there's some research and studies ongoing at the moment that there's actually human trials going on from a corona vaccine on the way from a company called Moderna, Moderna, ticker symbol mRNA, all right? But they said it's going to take about a year. They're going to monitor the patient for a year. In a year's time, you're going to have a vaccine. So the market doesn't really care about that today. Goldman Sachs overnight goes completely kind of dark on us and says the following. Over the past few days, the escalation of the coronavirus in Europe and the US, as well as exceptionally poor January, February data out of China, all right? It's very colorful language, have led us to downgrade our growth forecasts sharply across most of the world's major economies. Consequently, our global GDP growth forecast for 2020 has fallen to just 1.25%, 1.25%. All right, this would be less bad than deep recessions of 1981 and 82 and 08 and 09, but worse than the mild recessions of 1991 and 2001. And Goldman Sachs just stole my research because they printed this morning, all right, and I did the slides yesterday. So I'm going to have the attorneys call Goldman and do absolutely nothing. Just say hello. Can't be Goldman. They didn't steal it. Look, everyone's thinking the same thing, right? Because the question now is, how much economic impact will this have? This fear reaction, oh my God, the coronavirus is here. That part is over. We've accepted that. Something's here that's going to affect the entire world. It's going to affect demand, consumption. Now the people are thinking, and economists are, okay, it's happened, all right? The damage is done. We can't really reverse that. We can try to stop it, and we are, but that's not our job. Our job is to decide what will the GDP and economic damage be to this, because we don't know that yet. Economic damage is always trailing from the actual event. And so I've outlined 3 scenarios I'm going to present in the Elite webinar tonight. One of them is kind of the optimistic scenario, that things will rebound and this is just a soft landing. We don't go into a full recession, doesn't get any worse, and we're pretty close to the bottom. All right, that's one of the scenarios. There are 2 other ones. I'm going to warn you, George is going to go dark as well. But you got to know there's an array of options. And how do you know which one's taking place? We're going to present that today. All right, Goldman, though, is going dark and saying they think that we're going to, it's not that dark. They're saying it's going to be a soft landing. So there you go. Goldman Sachs is there too. A lot of talk, by the way, has happened with these banks. You need to know this. And I'm going a little bit over this morning, but, you're getting your money's worth, and this webinar is free, or this broadcast, so there you have it. All right, so here's the thing. A lot of these banks have been suspending dividend buybacks. I don't know if you guys have been listening to this. I think there's something going on here behind the curtains. They're doing the dance. Love you too. That's so sweet. Thank you. Give me a hug, Casey. I'm embracing you. All right, a lot of these banks have suspended dividend buybacks. And they're putting it in the name of, we want to support our clients, all right? We want to have capital availability to help us come through this, coronavirus together, kumbaya. That's all good and well, but I think there's more behind the scenes of these banks. I think they're having really big shortages of cash behind the scene, all right? I've been doing some research, and a lot of companies and corporations, think about this. If you're a big bank, if you're a big hedge fund, if you're a big company that, creates toilet paper, you manufacture toilet paper, whatever it is that you do, that's an inside joke between me and the wife, but whatever you do, and you have a credit line, all right, where the bank has been giving these things out like candy, saying, hey, if you ever need it, here's a credit line, borrow money from us. Well, now is the time when maybe you don't need that cash, but you say, hey, for this low interest rate, what if I draw down my credit line and have this money available in my bank account as cash, as a backstop, as a worst case scenario? All right, what happens if I do that? What happens if all the companies draw down the credit lines that have been provided like free candy over the last decade? and these things couldn't have happened again. The Fed's here, they got our back. What you would get is a shortage of liquidity, a shortage of cash. And this is why the Fed is doing $500 billion repos in multiple sessions, right? So despite what you've been told, I think that in the dark case scenario, what brings us down is not coronavirus. It's a liquidity crunch and a contraction of credit. All right, I think that's the thing, the shot that's going to fire and really hurt this recovering bull. Okay, and that's what we got to watch for. That's the important information. I'm seeing some really big liquidity problems based on behaviors, the way people are answering interviews, and what the Fed is doing. So be careful. All right, be careful out there. I don't think the worst is behind us, I think, but I think there could be more. And I'm going to outline those scenarios in the Elite webinar tonight. Let me move forward. Stephen Box is extremely upset. He needs to start talking about oil soon. Has Deutsche Bank deregistered as a company in Germany? I've heard it has. I don't know. That's a really good question. It may have. All right. Yeah, Greg, I agree with you. You know, there is an overreaction to the coronavirus. All right, Greg, but you look like a young guy, right? So it's easy and I'm a young person as well, but at least, I mean, I'm older than yesterday, but I still consider myself to be a little bit younger. And so when you're younger, it's easy for us to say, you know, what an overreaction of the society. Imagine being 65, 70, 80 with respiratory issues, all right? Or somebody who's got health conditions and low immune system, right? Then it's not an overreaction, all right? It's not a death sentence, this coronavirus, but for some people it is. And so while the young people are underreacting, it's their responsibility to prevent the spread too, all right? Just because you get it and you don't feel symptoms and your odds of something fatal happening are 0.2%, it doesn't mean that you're not responsible to contain it. You know what I mean? So I don't think it's an overreaction yet. We don't know. In 6 months' time, if this thing ends up containing itself, a vaccine's found, certainly there's an overreaction. But if it gets worse, then this is maybe even an underreaction. So we don't really know. I'm with you. That's one opinion. And I'm kind of trying to look at all the circumstances because at the end of the day, my opinion isn't what's going to make me money. My knowledge and info will in the market. And that's the whole focus of this broadcast. All right. In Asia, Japan's up 0.1%. Hong Kong's almost 1%. China's down 0.3%. India down 2.6%. My gosh, India's having a hard time. The markets are getting slammed there extra hard. In Europe at midday, London's down 1%. Paris is down 0.7. Frankfurt's down 1%. And in the U.S., futures across the board are up 1%. Nasdaq's up 2.2%, a little bit more. Oh, really, Greg? Okay, I'm sorry, brother. So, Greg, you know, you look like you're in good shape. Take that, Greg. I'm running out of bullets, though, Greg. You got to say yes to this one, or else I'm going to have to end the broadcast. Thanks, brother. I appreciate your comments in the videos. I love to see dialogue from you. You bring a lot of insight. So thanks for being on the channel, by the way. You know, we're friends sharing opinions on this channel. It's a group we're trying to win together. I appreciate you guys so much. You guys have no idea. I'm so excited for these updates. So I'm 13 minutes in and I barely finished. Retail sales this morning came out a little bit weaker than expected for February, down 0.5% on an expectation of 0.2% positive. This was 8:30 in the morning. So these retail sales coming out a bit weaker in February. It's not a surprise. The real numbers I think that are going to be interesting is March. So the market shrugs this off and says, we already know February was bad, but how bad is March? That's what we're trying to look at. All right. Industrial production is up a little bit today. It's up 0.4% versus minus 0.2 expected. Wait a minute. No, it's not up. It didn't release. I clipped the number before it dropped. It's coming out in 1 minute. All right, 10 a.m. we have NAHB Housing Market Index, and then JOLTS, Job Openings, Labor Turnover Survey, an indication of employment. That's going to be interesting. Crude oil is up a little bit this morning. Gold is down about 1%. Crude oil is up 1.6%, and Bitcoin's up 16%, but still in the low 5,000s. That's how the markets are at. Today, I think you have to be cautious. Today could be a bottoming out or a consolidation day, and there could be some head fakes and chops. The way you trade these kind of environments is start slow and small. A lot of brokers have reduced their margin requirements. It was $9,000 for one ES contract. Usually it's $400. They've reduced the liquidity or margin requirements. The way you do it is you go small. All right, you start with small size. All right, you take profits quicker, and you cut your losses quicker as well. And don't look for trailers. You're not like, I'm going for 600 points. Take a small amount regularly and then build on that, expand on that foundation. That's how you trade today. Start out slower, smaller size, take profit quicker, all right, and manage your risk. And if we get some nice trendy volatility, jump on board. Have some runners. But at the beginning, I'm telling you, this could be a chop fest based on the overnight session. Be very, very, very careful today. All right, manage your risk, trade pros. We'll see you tomorrow. I remember elite webinar tonight at 8 p.m. is going to be epic. What do you think will happen with the Fed meeting on the 18th? That meeting is done. We're not having a Fed meeting, Craig. It happened already on Sunday, if that makes sense. I don't think they do it. They're not going to do anything. They said that these cuts are in lieu of the Wednesday meeting. So the meeting basically got pushed forward to Sunday. Make sense? All right. Love you guys. Have a great rest of your day. Be careful out there, please. Send you love, joy, and happiness to you and your beautiful families. It really warms my heart. I get to talk to you guys every morning. All right. This business is lonely to do it alone. I'm thankful I have you. Love you. Have a great day. Ciao. I got to open up a trade room. Bye.